Hi, everybody. Good morning. It's your pal, Uncle Bruce, with the YouTube channel called Stock Markets with Bruce. You have any idea? You have no idea, really. You can't know how many gazillions of dollars were spent in research to make the name of this channel. But I am Uncle Bruce, and this channel is Stock Markets with Bruce, and you're benefiting from all that money. Congratulations. Thank you for joining me. We do have a positive pre-market. It's holding the positivity all morning long. We've been holding or gaining, so far so good. The question on everyone's mind is, how strong is this pre-open, and is this an indication of a buy wave waiting to come into the market to grab stock? Now, if you take a look at Tesla, and that's the only way you're going to measure this market, you're going to go, hey, this market's on its way up, because the Tesla shares are up $14 a share, $244 right now. They're surging here. They were as low as 217 yesterday, 244 right at the pre-market for now. Okay. Well, if you use another metric, other stocks to measure, well, and let's just take a look and see what it looks like. Right now, I've got Rocket Lab heading for $20 a share here. It's unstoppable. It's $19.47 a share now. This is up 164 in the pre-market. We were up 71 yesterday to close at 1782. We're now at 1947 on Rocket Lab. SoFi just blew past $12. It was $11.26 last night, $10.85 on the low yesterday afternoon. It's now $12.06. SoFi up 80 cents this morning, catching a definite bid, no question about it. The CPI report just came out showing a 2% retail price increase in February. The market is really liking this. This is good news. GameStop just caught a bid. $22.95 on its way to 23, up 34 cents. Other stocks, Apple went green about 30 minutes ago. It's now up 50 cents. Tesla's up $14. Microsoft is up 336. Google is up 4. Amazon up 393. Nvidia up 450 a share to 113. It was 108 yesterday, and it was 107 before that. I think yesterday's low on Nvidia, if I'm not mistaken, 104.77 was the low yesterday on Nvidia, 113.50 right now, and the market likes what it sees on this inflation report. Okay, continuing on with other stocks. Meta Platforms, the Facebook shares, busted through 600 yesterday after getting annihilated the other day. It was down into the 580s. Now 622, up almost $17 this morning on Facebook. Meta Platforms looking fine. Supermicro gained 394 yesterday. Already started moving yesterday. Didn't wait for today. Now up another 284. We're up to 43.68 on Supermicro Computer. ASTS up $1.22, almost hitting $30 this morning. AI is up 95 cents, pushing $22. Palantir up 5.20. I was up 160 yesterday. We're back to 83.28 on Palantir. MicroStrategy was 260 last night at the bell. It's 270 right now, up 9.80 a share. Unity up 74 cents to 21.71. We've got Goldman Sachs losing 23 cents yesterday, up 12.81 this morning. Cisco down 139 yesterday, up 15 cents now. Netflix had a big day yesterday after a terrible day before that. Up 28 yesterday, up $14 right now, pushing 909 to 910 a share. Pfizer down 65 cents yesterday, up 6 cents this morning. ARC Innovations up 33 yesterday, up 165 now. IBM is up 360, trying to claw back that 7.95 loss from yesterday. Uber up 150, HPQ up 26, Home Depot up 485, Vanik Semiconductors up $5.38, Adobe up 383, and Enphase up 172. That is the story right now. A very positive pre-market coming through here with definite moves on some of these stocks. We're going to see volatility going all morning, and will we hold these early gains? I don't know, but so far, so very good, and we'll see just what comes of it. Welcome all to the program. Thank you for joining us from around the world. It's great to have you here. I appreciate you all, of course. Thank you. Now, a couple of things. I've got a poll question going on today, and I would love to get your take on this one. If you could take the time to hit the thumbs up button for me this morning, give my show a little momentum, and also answer the poll question here. Here it is. The question has been launched with 82 results already. The question is where I live. Okay, now I don't care if you're in America, Canada, the UK, Germany, wherever you are in the world, just convert the number I'm asking you to an American number and answer this question. Where I live, the average price for a house is about how much? 300 to 400,000 US. 35% of you are saying this is where I live. 400 to $600,000. 26% of you are saying that is the average price of a house in your neighborhood. $600,000 to $1 million is the average price of a house in where you live. 28% of you tell me that. And $1 to $2 million, I'm probably talking here to folks in Vancouver, British Columbia, Seattle, maybe, certainly San Francisco, any part of Cupertino and the Silicon Valley, parts of Los Angeles, New Yorkers, anywhere else. $1 to $2 million is, if that's the average price where you live, 11% of my responders are saying, yeah, that's the average price of a house. I have a reason to ask this question, so please hit that poll question with your answer, do the conversion in your mind, and come up with a US number for me. Figure out which one of those works for you, and do let us know. Thank you, everyone. And again, for those thumbs ups, thank you, guys. We hit over 200 yesterday very easily. I appreciate that. That was a great day yesterday. We're at 58 right now, going for 200 again today. I appreciate you if you can nail that thumbs up button. 92 votes and counting on the poll question. We'll keep an eye on that. All right, 242.90 on Tesla. 243 now on Tesla. How high will it go today? What kind of recovery are we talking about here from these markets? We have quite a bit to follow here, to say the very least. We've had a real sell-off. Yesterday morning, the NASDAQ was down 13% from its high on December the 16th, just before Christmas. And we gave up quite a bit of ground. We've had stocks in the S&P 500 drop as much as 30%. We've certainly had Dow 30 stocks drop definitely by 20% already. There has been a real cleaning of the house. And so for some of these stocks, it was too much of a drop. For some of them, it may not be yet enough in the long term, but it was too quick, too fast when it happened. We'll come out to an equilibrium here. It always levels off, and the market reassesses its position and figures out what it wants to do next. SoFi right now 1186 after touching 1206. Don't be surprised if SoFi hits beyond 12 today again and just keeps going. The SoFi shares are so grossly oversold. This is a stock of many stocks that have backed off. This one, way too much. Maybe the 14 level was a fair pullback level, but 1085 yesterday afternoon, or with 3 hours to go yesterday, that was way too far, too far, too fast. And so no surprise to see it already pushing back to 12 and pushing 12 and a half, 13 later today or tomorrow. Could well be in the cards for SoFi. It could be. Am I guaranteeing it? Do you see a written guarantee anyway? No, but my opinion, you're interested in it, that's my take on it. For those of you who have written cash secured puts on your SoFi, and you've been sending me private emails going, how do I look? How does it look to you? These are my positions. I got some $20 cash secured puts written. I've got 17s, I got 15s, I got them out to this fall, I've got them out to next January. I'm all over the map. What do you think? I've been writing these and taking big premiums where I can get them. I'm saying enjoy the ride. Sit on the cash you've been sitting on. Haul in interest on your money. dare them to exercise you. I doubt very many of you will get exercised at all. I just don't think so. And you're hauling in interest income from other people's money. You take this money and say, thank you, sir. May I have another? The shares at $12 puts the $20 cash secured puts, for example, to January 26th. They're worth $8. But with time premium of $1.25, $1.50, they're trading at $9.25, $9.50 a share. Did you write them at $7.85, $7.50? You're down $1.25. $2 on these, not to worry. The stock wants to pop to $14. Your cash secured puts have a $6 book value. They'll be trading at $7.75. That's where most of you sold your stuff. You're already sitting there going, nothing's happened to me. The market went through carnage. The stock market went through the heebie-jeebies. The headlines out there were just terrible all last week. And in your case, what did you do? You listened to me back in September, October of last year, and you started selling stock and started writing cash secured puts. And you did that on Rocket Lab. You did that on GameStop. You did that on SoFi. You did it on AI. You did it on a bunch of other stuff. And the market has gone stupid. And you've just sat there going, well, I'm sitting on a mountain of money that I cashed in on back when the markets were hitting all-time highs. What am I worried about? Nothing. You're worried about nothing. Yeah, you're watching it, but you're not in danger at all. Where if you're just a shareholder, you've been going through the grinder, and there it is. Now, if you are a shareholder inside a 401k, you're a shareholder in a Roth IRA or an RRSP in Canada, other accounts that you can't do cash secured put trading on or credit spread trading. You have to write call options. You're stuck. You must write calls. Well, you've actually, if you've been proactive about this and you've taken my classes and you're taking my classes and you're here every day, you are writing call options like crazy. And you're not afraid to do rollovers of your call options on the way down or on the way up. Volatility and movement allows you to make moves that make you money anyway. So congratulations. Well done. You've taken control of your life and you now own your future rather than have some money manager in some anonymous office building in some little cubicle somewhere push a button and move millions of shares around and who knows what they're doing. And you get these statements every month or so that tell you that you're making an annual return of 6.4% or 3.8%. God help you if you were ever in that, or if you know someone that's stuck in that world where the majority of their wealth is stuck and is being managed by some committee of experts. Good gracious, that is not, I don't want to hear that. If you've got $100 million and you've got a committee of people looking after your money, congratulations, you've got the money to handle that kind of talent. Super. But even those kinds of investors fire advisors that underperform the market. Those of you with, 50 grand to 5 million in your retirement accounts and to your entire existence, hey, you've got to manage your money and make it make more than 6% a year. You cannot get by on 6% a year. As a matter of fact, I have a little story for you today because I know you love a good story. You all love a good story. I got a little tale for you guys. Listen up, Buttercup. Here's what's been going on lately. And when I say lately, I am talking about the 1980s to now. Now, I know some of you are sitting there going, oh, God, he's going to talk about the 1980s. Oh, I wasn't even born yet. If you weren't born until the year 2000 or 1990 or so, you have to know what the hell happened before you showed up, because your parents were dealing with what I'm talking about and what I'm going to talk about, and they had to make decisions going forward, one of which was to have you, whether you showed up wantingly or you just showed up because you decided to show up. You weren't expected and you showed up. Nonetheless, the world that your parents were in before you came into this world in the 90s and the 2000s, and or if you were born in the 80s, by design, this is what they were looking at that time. I want to give you a comparison about then to now and a couple of other little tidbits of information. But first, I want to ask you something else, or tell you something else, and that is about the so-called inflation rate. I just told you that the retail inflation rate, whatever this thing was called, came in at 0.2%. The market is reacting positively to this news. We're up 328 on the Dow right now. We're up 70 on S&P, and we're up 300 on NASDAQ. So the Dow is up 0.8%. S&P is up 1.25%, and NASDAQ is up 1.65%. This is nowhere near the losses we've had the last couple of days, but this is certainly a snapback rally with momentum behind it. Great. Crude oil up 91 cents. But the inflation number, do you trust it? When you look at your expenses, your revenue coming in and your money going out, do you believe that the 3.3% inflation rate, or whatever they're quoting it is now, is your inflation rate? I already know the answer. This is a trick question. You're saying, no, it's not, Bruce. It doesn't reflect my world at all. It was a trick question. I'm not making you mad, I hope. The reality is this. When inflation is calculated by the government, by financial experts, by rating agencies, whoever these invisible people are that so-called produce the inflation reports, they don't take into account one particular aspect of the economy. It's not measured at all in inflation. And this might surprise the hell out of you, but the one area of the economy that is not taken into account to calculate the cost of inflation is something known as interest rates. If interest rates go up or down, the experts don't use that number to calculate inflation. They only use the numbers of the indirect effect of that to calculate inflation, but not the actual inflation rate. So if you find that your mortgage went from 3%, you got transferred to another city, and you sold your house and you bought another house, and your mortgage is now a 6.5% mortgage instead of a 3% mortgage, inflation has hit you in right between the eyes, because your mortgage payment for every dollar you're borrowing is higher. That doesn't matter in the inflation report. The 3.3% inflation report is not reflective of higher interest rates. The United States, Canada, Europe, we were in a world right up until most of COVID and through COVID, negative interest rates or lower than inflation interest rates. You could buy a new car in Canada and the USA with $500 down or nothing down, and you could get a 0.99% in a 9-year loan, 8-year loan, 7-year loan on a car, truck, SUV, whatever you wanted. Mortgages in Canada were as low as 1.9%. Mortgages in Germany were negative 0.5 percentage point. Money was free. Money was essentially free. Inflation was 2%, and you could borrow money for that or less. And that showed a very mundane inflation rate. But when interest rates began to get lifted by the Federal Reserve in the United States and the ECB in Europe, the Bank of England, the Bank of Canada, the Bank of Japan, all the banks around the world began to raise rates because they were worried about an inflation wave coming as the economies were restarting after COVID. It had nothing to do with Joe Biden. It had nothing to do with Prime Minister Trudeau. You were lied to. When inflation began to run, even in China, because of Biden, the interest rates got lifted. And when the interest rates got lifted, your personal costs went up. And you were blaming it all on a politician, going, oh, yeah, the cost of jam has gone up. My bread has gone up 10 cents a loaf. This is political interference in my world. The reality is that the cost of money went up. And the cost of money went up for everyone, businesses and private people. And in reality, in the year 2022, if you take the cost of money inflation into the mix of actual inflation, the inflation rate for 2022 is now being estimated at 18%. It was an 18% inflation rate that hit all North Americans, Europeans, people around the world. And you know what I'm talking about. You absolutely understand it because you were getting your paycheck every 2 weeks, every month, and it wasn't going any higher. And your costs for everything was soaring. And you were all going, what the hell? They're telling me inflation is 6%, and I'm seeing 18, 20% prices at my grocery store. My cable bill went up. My gasoline is higher. My a car loan is now like unbelievable. A new car is 20% more expensive. Where is this 3%, 4%, 6% inflation rate? It doesn't exist. The inflation rate for 2023 has been estimated at 9%. It came from 18 to 9. And the official rate out there is 3.3%. That's the reality of what inflation is all about. Now, we are talking here about eggs and, everyday mundane stuff. Prices are ridiculous. So, yeah, I agree. That's exactly what's happening here. But I want to talk to you about something else. And this is where you kids who are under 40, you yappity, 8-second attention span brats that are now taking over this world. I am targeting you guys because you guys have got to get a dope slap once in a while. Your parents are probably too old to give you one because you can stop it now. You can put your hand up and they can't hit you anymore. But some of you need a dope slap. And I want to bring you back to when your parents found out you were showing up. What the hell was happening? Back in 1980, here are some approximate numbers for you. Just absorb this. In 1980 dollars, if you wanted to buy a brand new color television in 1980, you were likely going to buy the Sony Trinitron, or you're going to buy the Hitachi whatever. You're going to buy, even if you're going to buy a console TV, you're going to buy a 26-inch television. The big ones. Those are the big ones back then. The best ones, Zeniths and Mathis TVs and the brands that don't exist anymore, $1,000 in 1980. In 1980 dollars, $1,000. Inflation from 1980 to now, almost a tenfold factor. Everything that cost $1 in 1980 probably cost $8 to $10 today. Can you imagine buying a television today for $8,000 to $10,000? Computers, home computers. You wanted to have a home computer, you're dropping $2,500 and you can play Pong on the damn thing. There was no such thing as internet in that time. Microwave, a brand new microwave oven, a big one suitable for the family with 1,000 watts of power, up to $1,000 each. They used to be $2,000 in the 70s. They're down to $1,000 in 1980. That's $8,000 to $10,000 today for a microwave. Think about that. The F-150 pickup truck, a brand new F-150 in 1980, didn't have power seats, didn't have power windows. It was a utility vehicle. It was a farmer's, plumber's, painter's truck. It was a contractor's basic vehicle. If those suckers cost $8,000 to $10,000, I'd be shocked. Absolutely shocked. They could have been $6,000. A house in 1980, not uncommon for a typical house in a typical suburb across the U.S., Canada, and elsewhere, about $80,000. And those prices were ridiculous because we had suffered inflation through the 70s. These used to be $35,000, $40,000. They were $80,000 in 1980, and people were shocked at the cost of real estate. What was the average salary in 1980 for people working in those days? If you were a college graduate and you came out with your degree and you got some kind of a job after a year or two or three, I'm not talking about kids just getting out of school, but 3, 4, 5 years experience, not uncommon for $30,000 to $40,000 a year to be made at that time. $30,000 to $40,000. If you were a higher end, top third participant of the economy, you were $50,000 to $70,000 a year back in the day. A rent payment, if you were renting a 2-bedroom apartment in most of America and Canada, you were paying $350 to $450 a month in rent for a 2-bedroom unit. That's what it would have cost you. Now, if you were to buy a house back in 1980 and you had a $5,000 payment or a $10,000 down payment, you could have got a mortgage for the rest of the house, more than likely. The cost of a $100,000 mortgage, by the way, at 6.5%, which was the rate back, well, maybe not quite back then. It was a little higher than that. But let's just say you could get a mortgage that cheap in 1980. Maybe it was still higher than that. It would have been $643 for every $100,000 you borrowed. If you needed to borrow $70,000 to buy a house, you were paying $450 a month in mortgage payments for the house. You're making $30,000 to $40,000 a year, and you had to come up with $450 in mortgage, insurance, property taxes, utilities, heat. You're at $700 a month max, $650 most likely. And you're hauling in $2,500 a month at $30,000 a year before tax. Interest on your mortgage was tax deductible. Americans anyway. It was affordable. People earning $40,000 a year could have an $80,000 house. Not a problem. That wasn't an issue. $50,000 to $70,000 in income, you could afford a $100,000 house. So those were big houses back then. Telephones. Back then in 1980, there were landlines. There weren't cell phones in 1980. They were invented. They were coming. They were the size of brick. 99% of the world had landlines. Did you have internet in 1980? No. You had cable just coming out. Cable, yep, in the 70s and 80s, cable showed up. What was your bill for your cable bill, your phone bill a month? $30, $50 a month, maybe $100 a month if you're making the odd long distance call, because long distance calls were $1 a minute, $1.50 a minute, or less based on what time of day or night you made those calls. These were the days from way back when. Today, a television compared to $1,000 back then, you can buy a TV. $1,000 today for a television? What are you picking up? A 75-inch flat screen on the wall? A 40-inch flat screen, 42-inch flat screen, which is massive compared to a 26-inch console television. You can't spend $500 today on a 42-inch. I bet you're paying $399. Walmart, $349. In today's dollars, you think about that. In 1980, divide that by like almost 10. So if you're paying $500 for a TV today, that's like $50 back in 1980, just to kind of give you an idea. A computer today, a laptop, a basic laptop, not high-end brands. You can get a laptop for $500 to $1,000, not a big issue. An Apple laptop, $1,500 to $3,000 in today's dollars. They used to be $2,500 for desktops. They didn't do anything. They had floppy drives. Good Lord. Microwaves. You cannot honestly tell me that you spent more than $100 on your last microwave. Did you buy a microwave for your kids who went to college in the last few years? Were you shocked? You remember when microwaves broke $100 a piece? You remember the day that happened? That you could buy a microwave for under $100. $75 to $100 for a microwave is not an impossible feat anymore. Those used to be $1,000 in 1980 dollars. A Ford F-150. Have you priced a Ford F-150 lately at your Ford dealer? Gasoline, hybrid, electric, I don't care. You're looking at the Ford F-150. You can now get the Platinum Edition of these vehicles with leather everything, power everything, climate control, navigation hardware. I mean, what, 80 to 120 grand for a pickup truck? Easily purchased now. The cost of a house. I'm asking you the question straight up. What's the cost of the average house in your neighborhood where you live? And you're coming at me and saying, Uncle Bruce, I'm telling you right now, houses where I live, 161 of you are telling me that 32% say your house is $300,000 to $400,000. Average house in your neighborhood. 400,000 to 600,000, 28% of you. 600,000 to $1 million, 26% of you. $1 to $2 million, 14% of you are telling me this. If you are a starter home buyer today, you're lucky to be in the $300,000 to $400,000 neighborhood. If you're getting a new house just built as a starter home, I'm going to guess most of you are in that 400,000 to 600,000 range. And if you're now into a 3-bedroom suburban house with a double car garage, you're 600,000 to $1 million today. You really are. Yeah, I know some of you are living in towns and cities where you can get a nice 3-bedroom house with a 2-car garage and a nice yard, and it's $499 or $525. But 600 to $1 million is kind of normal. Versus $80,000 way back when. Now look, I've said to you a few times, $1 in 1980 is worth $8 to $10 today. So an $80,000 house back then would today be 400 and something thousand to, or 600,000, $800,000 or $1 million. And here we are. I'm telling you, today's houses are 400, 600,000 and up. Typical. Wages, however, here's the kicker. You're out of school, you're out of college, and you're getting a job in Wall Street, in Manhattan, you'll get a higher paycheck because it's expensive to live in Manhattan. But in Cleveland, in Austin, Texas, in Las Vegas, in Spokane, Washington, in St. Louis, Missouri, somewhere middle class, typical America, what is your starting wage going to be in the United States? I'm going to guess 50 to 100,000, 50 to 80,000 actually, if you're a university graduate with a degree and you're headed into some sort of a career. If you're a higher end wage earner in the United States, top 25% of Americans as of last year were earning $127,000 a year. The top 25. That was the entry level to get into the top 25%. 127,000. Top 10% of America, we've talked about this generally speaking. A couple of years ago, that number was 235,000 a year to get into the upper 10 percentile of the United States. Rent. You want to get a 2-bedroom apartment in some cities, you're talking $6,000 a month. In some cities, you're talking $4,000 a month. I would bet you the average rent in America now for a 2-bedroom apartment across the board, $1,300 to $3,000. It's a wide quote, and even the $3,000 is too low for many of you. You know what I'm talking about. Now, phone, the telephone. Well, you don't have a landline anymore. You have a cell phone. You have internet. You've got cable. Your computers are connected to it. Your phones are connected to it. Your iPad is connected to it. Everything's connected to it. How much are you paying per month for that? $200 to $300, $200 to $400 a month, with all the separate services like Netflix and Prime and Lulu and Disney and whatever they all are. It's unbelievable. But if you go back in time and you're paying $200 a month today for basic communication and internet, or $400 a month, that's like $35, $40 a month. It hasn't gone up. And yet you get so much more compared to what we got in 1980. And so if you are looking for a house that's $600,000 and you've got $100,000 in cash, I don't know where you're getting it from, because if you're making 50 to 80 grand as a starter salary before taxes and deductions come in, I don't know where you got 100 grand from. It took you 10 years to save it. I don't know. You need a $500,000 mortgage. And today, a $500,000 mortgage is going to run you at 6.5%, approximately $3,200 a month at a 6.5% 30-year amortization loan. Where is that coming from? $3,200 after tax for the house, plus insurance, plus property taxes, plus utilities. What are you talking now? $4,200 a month? Who the hell is making $4,200 a month? Not anyone. I don't know how you can afford $4,200 a month if you're making $60,000 a year. That's $5,000 a month before taxes. Not working. $80,000 a year. You're at barely $7,000 gross. You're at $5,000 net. $4,000 going to your house. What about your car, your food, your health insurance? No way this works. This is why everything is discombobulated. TVs have gone down in price. Microwaves have crashed in costs. Cell phones and cable and internet, much cheaper on a dollar-adjusted basis to what you used to get in 1980. Plus, you have a theater in your house compared to what you had back then. 3 channels, maybe 4. The cost of a vehicle today, nowhere near. 1980, you could have bought a Chevy Malibu, a Chevrolet Impala, a middle of the range car for $4,000, $4,500. Today, you want to get an SUV, 6-cylinder, 4-cylinder, a hybrid SUV, $60,000 to $80,000. It's just unattainable. The standard of living for the typical American, Canadian, and elsewhere has dropped dramatically because our wages haven't kept up. It comes down to what are you getting versus what are you paying to get by. And the reality here is the average American today, Canadian today, is actually a poorer person because they don't have the means to save for their retirement. And that's where I'm getting to in the end, is not in your 20s and 30s what your life is like, because you're living for today and you're getting your payback for all the studying you did in the 20s, your late teens and your 20s, and you're partying it up until you're 30, 35. And when you hit 35 years of age, you start to get back pains. Then your knee starts to hurt. Then you have shoulder issues. Then you can't snowboard anymore. You can't ski like you used to ski. Bike riding becomes more difficult, and running all of a sudden is a problem. And all of a sudden you're 35 and 40 and you realize, well, wait a minute, I'm already deteriorating as a human being because I'm not 18 to 25 anymore. And I'm only getting an $80,000 paycheck, and my boss is offering me 3% raises. And I have no way of moving up the chain in this corporation because this corporation is so structured now that the top 10%, I can't get into that group. And I'm stuck in the bottom 90% of this corporation. And in the world that I live in right now, if I don't generate $250,000 in my household, I'm one of the 90%ers spending half the money of the world, where the top 10%ers are spending half the money in the world, and I'm not getting there. And people are asking themselves, what about me? What's up here? My parents had it much easier than I had when I was born. When I was born in the 80s, my parents actually had it easier because they could get a house. They could have a house that would grow in equity, because after 15 years of mortgage payments on that $80,000 piece of garbage house that they at least had a house worth 120 to 150, and they only owed 45,000 on it. They had 100,000 equity in their house within 10, 15 years. How am I going to get $500,000 in equity in my house, or $1 million in equity in my house? I can't get into a $400,000, $600,000 house. Can't be done. Welcome to the reality of the day. There are families out there with their children, adults on the upper floor and grown children in the basement. There are scenarios where adults own the house and mom and dad live in the basement. They've made the basement just fine for them, and the kids and the grandkids are upstairs, and grandma and grandpa own the house. And the hope is that the kids can buy the house from grandma and grandpa down the road, or will inherit it, because they can't get their own. It's unbelievable what's going on out there. How many millions of Canadians and Americans are living in vans, RVs, living in trailer parks, living in Slab City, commuting in vehicles full time? They can't afford an apartment. They can't afford a house. They're working job to job as a nomad because they're trying to live for under $1,000 a month because they've got disability of $1,500 a month coming in, or Social Security is all they've got, and they're on the street. How many homeless are out there? It's scary as hell. There are homeless in the Silicon Valley, zillions of them, and they're employed homeless. The shift of the economy has been dramatic for some, dramatically bad. And what I'm getting at for you folks is, if you're learning how to write options because of this channel, you're understanding the markets in plain English as best as I can give it to you, and you're becoming an option writer, and you're bringing in income now, I'm desperately, as quick as I possibly can, trying to get you to make money in this market with all the uncertainty and volatility that's happening right now. The next 4 years will be a crap show. The worst thing to happen to Middle America is what's happening right now. Complete uncertainty. Business owners, and I'm not talking about, a little retailer in your town I'm talking about businesses that hire 500 people, 1,000, 5,000, 10,000 people, much larger. They don't know what the hell's going on next. They've got all kinds of consultants coming to them, telling them what they think is going to happen. But every 15 minutes, we have changes. We just had the education department lose half of its employees yesterday, apparently. These are the people that apparently are working with universities and colleges to get kids educated for the new world that's coming up, so that when things continually change and evolve, the university programs and the college programs and the trades are on top of it. Those consultants are being eliminated, eviscerated, because the current administration doesn't see any point in having a bloated left-wing political organization called the Education Department. Well, hey, when you're a billionaire, what do you give a crap? You've made your money. You're fine. All your friends are fine. All your donors are fine. What's the problem here? You don't relate to the bottom 90% because you're not in the 90%. But you run things, and away we go. I don't know. I'm just a guy in front of a computer trying to get you guys to the point where I can help you somehow, some way, learn how to write stock options, whether you own stock or not. And hopefully right now you don't. And you can thrive from option premiums coming into your hot little hands from desperate people out there. And I just mentioned 90% of Americans spend half of all the money spent, and 10% of Americans spend the other half. This used to be 1/3 of Americans spending half and 2/3 spending half. Now it's 90-10. Okay, where do you fit in the 90-10 equation? I have got to get you to the top 10% in order for you to survive, because I have a feeling it's not going to stay at 90-10. I think it's going to go 92-8, 93-7. I think people are falling out. There are more falling out of the top echelons and falling lower in the demographic graphs. Got to get you out of there. Got to keep you out of there. And those of you in your 50s, it is go time. It is go time right freaking now. And if you're in your 30s, it is time to wake up, Buttercup. You were born in the 80s or the 90s or the 2000s, and mommy and daddy held your hand and let you play video games with 8-second attention span programming, and you guys can't keep a thought. You got to rewire your brains to wake up to reality and figure out, where did you come from? Where did your parents come from? Where are we at, and where could we be going? And do you want to go there? Do you want to be a solid middle-class person that can't afford a house, can barely afford rent in an apartment, likely will be sharing a house with maybe relatives or friends into your 40s, into your 50s? Are you going to play that game? Because that is what the reality is for a lot of folks going forward. It's not good. It's absolutely not good. Look, we're up 306 points this morning because there's a relief rally going on, okay? We're up 67 on the S&P, and we're up 323 on NASDAQ. So the markets are showing a gain to start the morning. Don't think the worst is over. This is nice. Thank you. We'll take the gain. We're always happy. But does this solve all your problems? No. That the fact that the Tesla is back to $245 a share, does that mean everything's okay now? No, it doesn't. It's just at $245. Rocket Lab is $19.36 a share, up 153. SoFi $11.92, up 66. GameStop up 37 to $22.99. It's nice to see these green numbers beside their prices, but those prices are much lower than they were 2 weeks ago. Apple up 62 cents, Tesla up $14.40, Microsoft up $2, Alphabet up $2.80, Amazon up $4.80, Nvidia up $4.77, and Facebook up $19.67. On the Magnificent Seven stocks, I have been pounding the table for seems like months and months and months, begging you guys, learn how to write credit spreads on these stocks. Learn how to write call credit spreads on the Magnificent Seven. You can write 1 week, 2 week, 3 week, 4 week contracts all over the place, way out of the money, and score serious returns. On an annual basis, the returns are they're ridiculous. I don't want to mention how high it is, because you'll sit there and go, He's just one of these pump and dump guys. The kind of returns he talks about is stupid. So I just bring it down to a monthly return or a weekly return or a bi-weekly return. You can haul in 5% profit in a couple of weeks on a credit spread. That's all it takes. Do that for 50 weeks a year. Do that 26 times a year. Do the math yourself and then be amazed. And then call yourself a pump and dumper because the numbers are ridiculous. The compounding ability you have to compound returns on credit spreads where you control the spread, the amount of cost of a credit spread. You control the length of the credit spread. You control the prices of the contracts that you're writing and buying. You're in total control when you create the credit spread. You cannot blame Donald Trump or Prime Minister Trudeau or Biden or anyone else for any credit spread profits you don't make if you don't take them. You have to make your move. You need to understand how options work. And I just keep telling you that you can go to my website down here and learn how options run, how they get created and why they die. Go to my website and pick up some lessons and start from there. Welcome all to the program. Congratulations to a majority of you watching me today and always watching me. You're a member of my channel, you're an option writer, and you've started to bring in money into your account. You never thought you would ever do this. You never suspected 3 years ago, 5 years ago, that you could actually bring money in from writing stock options. You had no idea what the hell those were. You had no idea there was another side to the option market. All you knew or heard about or were told about by a friend that option buying is risky. Don't buy options because you can lose all your money. You had no idea that you could be the one selling the options to those who are buying options who lose all their money. You figured out, coming through this channel, you can be the casino and you can write these things. Oh my God, I can be the casino and I don't need $1 million account to do this. You don't need 100,000. You don't need 50,000. You don't need 30,000. You can be an option writer with $2,000, $3,000, $5,000. You can write options. You can write 10 credit spreads with $5,000. Welcome to the party, pal, where here we try to make money. Friends are nice, associates are great, but making money is what it's all about. Because I just talked to you about a little story here that was 45 years in the making. That might have included your lifetime. Things have changed since 1980. This is after we stopped sending men to the moon and walk around up there. Okay, the last man on the moon was, 1974? The last time somebody walked on the moon? I just gave you the 1980 picture, okay? The 1990 picture, the 2000 picture, the 2010 picture. It keeps evolving. It keeps changing. The standard of living of most North Americans and Europeans is falling, okay? We keep talking about, oh, isn't it great to buy a TV for only $500? Isn't it great? Yeah, that's nice. Now, plug it in. Get the internet. Buy all your add-ons to it. Now, how much are you paying? You're paying $200 a month to watch your television that costs you $500. Guess what? That's not going to stop. That's going to get worse. Hang the TV on a wall. Whose wall are you hanging the TV on, by the way? It's not yours. You're a landlord. You got a landlord to pay, or you have a banker to pay for a mortgage. The problem with a $500 television or an $800 beautiful giant television is you have nowhere to put it because you can't afford to put it anywhere. Living under a highway or living in a van down by the river, you can't have a 75-inch screen in your van. It doesn't work that way. The world is against you when it comes to the demographics. You've got to lift your revenues. And this channel, this little old channel right here with 225 people on it, unbelievably is one of the only channels out there where I can talk to you about raising your monthly income. I'm not talking to you about becoming lucky and hitting $1 million stock position. I am talking to you about raising your monthly income, your take-home pay, the money you can spend to live on. is what I'm talking about here, from the stock market. No, there's no one else telling you about this. The only guys who talk to you about getting monthly income from the market or any kind of income from the market are dividend stock promoters. Promoters who tell you to buy good quality dividend paying stock. Guess what the return is on those? 2% to 6%. What's inflation right now where you live? What's your inflation rate in reality? Is it 9%, 12%? And they're telling you the smart thing to do, the wise thing to do, the best long-term plan to have a good retirement is buy dividend-paying stock over the next 30 years of your miserable life. God bless you for that. Good luck with that one. Just all the best to you. Because if you go back in time to 1990 and 1980, and you were buying at that time the best dividend-paying stocks way back then, a number of them don't exist anymore. They're long gone. And the replacements that have replaced those companies, they don't pay a dividend like they used to, because dividends are so yesterday. The street would rather buy its stock back than give you the money in a regular dividend payout. Apple could afford to pay a 5% cash dividend right now on all of its shares, but it won't do it. They would rather buy up to 5% of their stock back off the street so that they can give their top employees stock options, replacing the stock the company bought off the street, giving the illusion that there are fewer shares of Apple free trading and the shares will go up in price. And in reality, there are just as many Apple out there now as there were years ago, because there is no 5% reduction every year in the number of Apple shares out there. And it's the same for, you name 1,000 other companies. They're all bragging about stock buyback programs to entice you to buy their shares because they're trying to give you the illusion that they care about the stock price going higher. Well, they do care about the stock price going higher. That's not untrue. The problem is that they're not making it better for you to be a shareholder of these companies at all. The only way you can be a shareholder of Apple, Microsoft, Google, Amazon, Nvidia, Oracle, I can't think. Tell me 100 different stocks that are big companies that are 500 billion, 200 billion in capitalization or higher. Name them all. The only way you can make money being a shareholder of those companies on any kind of a basis is to write options on those stocks. It's the only way. And I have good news for you. I got really good news for you. If you buy IBM stock right now, you buy Apple stock, you buy whatever, your dividends are nothing. 2%, 2.5% or nothing. Option premium, you can easily bring in 2, 3, 4, 5% a month in option premium on the value of your stock. It depends on which contract you write. It depends on how you're going to do this. This is why I have these lessons here. Why don't you bring in 3% a month from your stock that you're sitting on? You've been sitting on it for 10 freaking years. Why don't you bring in 3% a month on these stocks? Charge them rent to be in your account by writing options to the gamblers out there who are gambling on what the stock's going to do. You're never going to sell the stock? Fine, write options on it and get paid to hold it. And as that money rolls in, eventually you'll be able to buy another 100 shares to write another contract to bring in more income. Some of you out there you just don't get it. You're sitting on 5,000 shares of a company that you've worked for years and years and years. You could be writing 50 call options right now, 50 contracts that could bring you $400 a contract every few months. $20,000 every 3-4 months could be coming into your hot little hands from option premiums by just offering your stock for sale at a higher price than they're trading at. It's so simple. It's unbelievable. People don't believe me. They don't believe it's that simple. If it's so good, Bruce, why doesn't everyone do it? Exactly. Why is it that? Why is that? Why is it that if it's so damn simple, everyone isn't doing it? What's wrong with this rule? Well, maybe it's because you were never told you could do this. You never learned it in school. You certainly didn't learn it from your boss. You didn't learn it from your banker. They don't know. Your boss at work doesn't know you can write options on the stock that you work for. They don't know that. They're so into the Kool-Aid about, targets, production targets, and holding on to their jobs and trying to get that 3% pay bonus. They don't have a clue that they could be hauling in more money writing options on the stock that they've earned over the 10 years they've worked there. They could quit their jobs today. They don't realize that you might be in a position out there where you could walk away from your job a month from now and say, I can bring in $10,000 a month just writing options on the stock I've already got. Why am I working here for $6,000 a month, $7,000 a month, $8,000 a month? Why am I doing this? Because after tax and cost of commuting and all this bullshit I have to go through, it doesn't pay. Why doesn't everyone do it? Because they don't study. They don't open up your eyes and figure it out. But look, you found me. I don't know how, but you found me. 244 of you are here. And if I can help you somehow, some way, maximize the return on what you're sitting on and get you out of your mess, get you out of this trap you're in, this so-called career trap that you've been bribed or not bribed, brainwashed into saying, oh, this is as good as it gets, Bruce. I'm a solid middle-class person. I am there. I'm a winner. And I'm thinking, really? Are you really? Have you achieved your life goals? Is it great? Is it happening for you? Because the next 5-10 years, AI is coming for you. Are you in a position mentally, spiritually, financially to be able to be laid off a year from now and not get by on that paycheck? Because if you don't have plan B in place to replace that paycheck, you're screwed, because you might not qualify for unemployment, or the unemployment you qualify for is 30 cents on the dollar, what you're making now. You're destitute in a micro minute. The minute you get called into a meeting that you thought was a sales meeting and it's actually a termination meeting, and there's a box that's being handed to you, go to your office and pack up and get out. It's over. Now you're going to learn how to write options. What mood are you in to learn this? You just had the shock of your life. You just got let go by your employer without any notice whatsoever, and they gave you a 3-month check to get the hell out of here. You're ready to learn how to write options now? Really? I don't know if you're ready to tie your shoelaces. Your hands have got to be shaking. You got to take control of your life. Get with the program. I'm an old man, and I'm warning you. And I'm telling you, I have seen this game played out millions of times through connections and contacts over my lifetime. It's happened again and again and again. I see it all the time happening right now. You're seeing it right now. Every day, another corporation is announcing 1,500 layoffs, 500 layoffs, cutbacks, reorganizations. We're going to restructure our corporation. They call it whatever they call it. But at the end of the day, what they're doing is they're eliminating people from their organizations, because their number one costs are you. You're a liability. You're not an asset to these guys. You've got to take control of your financial future. And I don't know how else to do it. I just nothing more I can do but just sit here in front of this computer and just beg you, please take control of your life and don't leave it to the man, the woman, or whoever you're working for. They have no power to save your ass. You think your boss is all powerful? Your boss could be hauled into an office this morning for a little chat, and this afternoon you're watching your boss walk out the door with a box in his hands. Just got let go, and all 200 people under that person are next. It starts at the top, and then they start eliminating everyone else from existence, and you're coming up. I don't know. I don't want to scare you, but I'm trying to give you the Will Smith dope slap. Wake you the hell up. This market is uncertain for a reason. There is volatility in this market, not because it's all going to be greater than it's ever been greater before. There are people out there terrified that their investments are in trouble, and they're terrified that if their investments are in trouble, and if stocks go down in price for certain public companies. Do you know what that means? It means the board of directors of these public companies haul in their top executives and say, our stocks are down 35%. We've already announced the stock buyback program, and that's not working for our stock price. Start laying off 20% of the staff, and we'll show the street that we're going to cut costs and we're going to get our act together, and that should save our stock price. Because top management of these companies, including boards of directors, are paid majority of their paycheck in the form of stock options. And the stock price means they either have an option worth anything or nothing. And if it means offloading 10 or 20% of the employees to get the stock to rally higher because the street somehow thinks that the company is reducing its costs, it's going to improve its efficiencies, and that's the name of the game, shrink and it'll be all better. It's the name of the game at the federal government right now. Everyone is joining the party, pal, and that means you're vulnerable. And that's what I'm trying to tell you. I'm trying to tell you that your great cushy little job you got going, that you thought you were invincible, you're untouchable, guess what? You're next. They're coming for you. They've already gotten rid of the cheapest employees in your organization. They've already gotten rid of the slackers. Now they're going after the most expensive people that they don't need anymore. And if they can replace you with a recent college grad or someone with 15 years less experience than you have, and they want to give that person a chance to move up the ladder, they'll dump your ass, bring in the other one for half price. And they'll go, if this person is half as good as the one we offloaded, we're fine because we're only paying half the money. Welcome to the Will Smith Dope Slap Hour, a courtesy of your buddy, Uncle Bruce. I'm your friend. I'm actually your friend. I'm not your enemy. I'm your guy. I love you. I want you to get rich. Nothing personal. Thank you all for joining me this morning. The comments have been coming through, and I've been yapping and yapping and yapping and yapping. I'm so happy you're here. Thank you all. Larry, thank you. The bells have been rung. We're open. We're trading. What is this market going to do today? Is it going to make you richer? I sure hope so, because you deserve every win you can get your hands on. You deserve every break, and you deserve every good thing because you work hard. You play hard, you work hard, you've studied hard. I don't know. You're a great mom, you're a great dad, you're a great uncle, you're a great grandfather, you're a wonderful person. But the world at large is changing, and it's changing in an ugly, ugly way. Have you noticed the lingo, the language coming out of offices that used to have esteem and respect? Have you noticed the kind of cutting remarks made to people today from the top? How do you think it's going to come down to the schoolyard? What about your kids, your grandkids? It's ugly out there, and it's going to get worse. I don't see it getting better right now. It's scary. Anyway, it is what it is. I think we're up 162 on the Dow. I think we are at the moment up. SoFi looks like it's a 1202 up 76. ASTS up 176. Rocket Lab up 131. GameStop up 35. AI up 91. And SMCI up 323. These are early, first thing in the morning quotes. NVIDIA looks like it's up 638 at 115. Tesla up 1770. Spiders are up. Qs are up. The Palantir up $6. MSTR up 530. Costco up 740. Coinbase up $5. We got gains. Google is up 285. Apple is up just 15 cents. Broadcom up 760. Microsoft up $4. Intel up $1. Netflix up 23.70. Meta up $24. EI Lilly up $6. Amazon up $4. Uber up 130. Adobe up 780. Cisco up 22. AMD up 260 a share. Unity up 110. It's green almost everywhere you look. And we're hoping for a solid green day to eliminate some of these oversold stock positions. Will it last 30 minutes? Will it last an hour? Or is it going to last all day? Stick around. We'll see what happens here. We'll be with you for the next hour, and let's go from there. Welcome all welcome all from wherever you are on the planet. I'm glad you're here. The S&P's up 62, the Dow up 125, NASDAQ up 332. The NASDAQ is up almost 2%. That is a solid move. Solidly good, 2%. The Dow's up 1/3%. It's not following. And this is a problem. This is why I wonder how much room have we got for improvement? Will the Dow wake the hell up and join the party, or is the Dow knowing something? Do they know something at the Dow 30 that I don't know, that you don't know? Our institutional investors, the big boys, the pension funds, hedge funds, mutual funds, ETFs, the ones with billions and billions and billions of dollars, collectively trillions of dollars of buying power, they're not buying the Dow 30 like they're buying the NASDAQ. What is wrong with this picture? Call, credit, spreads, cash secured puts, cash only is where you want to be. If you can be in cash only positions and make money off of cash, that's where you should be. Losers hold stocks on purpose. Just saying. I'm just a guy in front of a computer giving you my humble opinion. Ed, hey, thank you. €5. Uncle Bruce was out early this morning with his green paintbrush. Thank you, my friend. Appreciate the donations, all of you out there. Those of you buying these classes, looking me up for a one-on-one, becoming members of this channel. You're supporting this channel. You're supporting this YouTuber. Thank you very, very much. We'll keep on going as long as you want me here. But this market is telling you something, and it's warning you. I'm warning you. It's warning you. You may not be noticing the signs. It is time to extract money from this market. Absolutely making money from this market. Savage Wall Street, it's looking like I'll be buying back most of my cash secured puts today. I sense a nice dead cat bounce. Should be an interesting day. Being the casino is kind of cool. Rolled a lot of cover calls in time yesterday. Giddy up. Very nice. What can I say? Unbelievable what's going on out there. John, I'm in a Netflix March 14 covered a call credit spreads. Okay, I'm into the 930, 935 Netflix on the call credit spreads. Okay, where are we at on Netflix? There we are, 921 right now. Thinking of closing today as Netflix is on the move. Concerned. I bought when Netflix, or you wrote, when it was 860. I will take a little loss here. Well, move forward to 2 or 3 weeks forward and take a bigger credit, doing 930, 35s going forward, or go forward 940 to 945 a month further out, and you probably get just as much of a credit, if not more, and you've shifted ahead of the market. That's an idea. At the moment, we're up $28. Yes. 923 a share. Yes. A little too close for comfort. Yeah, definitely. For the last week, of course. A week ago, they were at 963, and we bottomed out at 863, 850, and here we are now at 923. So you make a shift forward in time, go forward, strike price $5, $10, $15 higher in strikes, give yourself more of a gap. That is the art of the rollover. We teach that in my classes. Absolutely teach that. Well done, John, and thank you for letting me in on that. I appreciate it. Welcome all of you to the program. Let's see how this market plays itself out this morning. 133 gain on the Dow, and now 150 maybe. S&P up 62, NASDAQ up 343, oil up $1 a barrel approximately. The man says 45% of my account is in cash, tied up in cash secured puts, and the rest is tied up in covered calls. Giddy up, giddy up, giddy up. Jeff, did you see my email about Hobbit? I have not had a chance to see any emails. I have been ranting and raving and raving and ranting. Let me take a look, see what I got here. Can I find it? There it is. Yes. It's where we met before. Yes. Around noon or something like that. JR and Jen and I are getting together for lunch. JR's coming in. Look forward to seeing you. Send us an email when you're on the way, and can you make it at noon? Great. If you're a little late, just let us know. Looking forward to it. It's going to be kind of fun to see JR. Way to go, pal. Very much looking forward to catching up with you. Thank you. Thank you for letting me know. Welcome to the party, pals. So you want to come out to Palm Springs, Palm Desert, Rancho Mirage to visit Jen and I? You let us know you're going to be around. We're plotting a get-together in Ontario, California at the Outback Steakhouse. I tried to call the Outback Steakhouse the other day, to see if I could make a reservation, kind of look at their calendar and see how busy they're going to be. Got an automated system. Finally, clicked a number and got a human being who said, "Oh, no problem. I'll transfer you to our reservation department," back to the automated system. And then it hung up on me. Corporate America, wake the hell up with customer service. Wake the hell up, because if I can't call a restaurant to make a reservation with a human being, I might not go there. How many millions of times is this happening across the United States with every restaurant chain in the world? I cannot believe how ridiculous customer service has fallen off because of this theoretically new answering service system that's going to make our efficiencies much higher. Absolutely ridiculous. But hey, it is what it is. It's crazy. I'll be there, says JR. I'll be there. Oh, rock and roll, buddy. Lisa, hey, Tesla back over 250. Could be eyeing up to the 17th April 285 or a 290 covered call. Those sound familiar. Definitely want to take some money off the table there. Mandu, 124 on the thumbs up meter. Good morning, Uncle Bruce. Thank you so very, very much. Yes, Blair, they want you to drive there. Yeah, I'm going to drive an hour and 20 minutes and then get there and hope to be able to secure a table large enough for a group of viewers coming in from all over the place. This doesn't work for me. I need to know that I have a table available for my party that might be 12 people, 16 people, 20 people. I don't know how many viewers are showing up. They're going to let me know when I tell them what the day is. I have to know that there's room for these. I can't even get through to a manager. Really? Unbelievable. Humans cost money. Yeah, they cost money, and they cost money. They cost profits when you don't use them properly. It's unbelievable. Somebody made the decision somewhere at Outback to use this fancy-dancy answering system that doesn't work. Maybe it works perfectly for takeout orders. Maybe it's perfect for DoorDash orders. I don't know. But when it comes to someone coming in with a party of 20 people, it's not working. That costs a lot more than the system. I think if you miss my business and anyone else's business of that caliber, your phone system is costing you money. Now you need humans to fix things. I don't know. It is what it is, and it be what it be. The Dow is now down 17 points. I told you. It doesn't look like the Dow wants to come along for the ride. This is a problem. Now, maybe it's a half-hour problem. Maybe it's the first 30 minutes problem. Maybe there are some hedge funds out there who have liquidity problems. I am hearing through the grapevine that we're coming up to the end of the quarter. You may have heard me mention that this is the 12th of March. There are 31 days in March. At the end of the 31st of March, it's the first quarter. And in the first quarter, thousands of money managers, hedge fund managers, pension fund managers, ETFs, mutual funds, any and all groups of money managers. There are thousands around the world, maybe tens of thousands around the world. All of them are going to be measured how they did in the first quarter. And I'm guessing that a whole bunch of these guys and girls are under unbearable pressure right now because of the losses that have been incurred in the market so far this first quarter. Look at what's happened in the first quarter. The election had been announced. We had new all-time highs in December. The inauguration took place on the 20 whatever of January. We've had nothing but fun from the White House and Congress and Senate ever since. Geopolitically, are things a whole lot better? Don't think so. And stocks have gone down. And so there are some many trillions of dollars in the flow of things right now where there are money managers not making money this quarter, or who have given away a lot of losses, a lot of profits that they had made in the fourth quarter, and now they're down in the first quarter, and or some scrambling to lock in gains where they can and try to come out with a month-end statement to their investors who have these trillions of dollars in the system, to say to their investors, here's what we've done as money managers, and here's our report card for the end of the first quarter. And it could well be that Apple is one of them, Microsoft is another one, NVIDIA is another one. You take the Dow 30 companies out there and you calculate the absolute size of these stocks and the amount of these shares held by these entities, and you realize, oh my God, NVIDIA up 680 today is great, but it's only at 115 a share. I'm into this stuff at 130. Salesforce is up $6, but it's down to 283. Boeing, I'm getting shellacked on. Amazon is at 199. Walmart at 88. I mean, these stocks, a lot of them have backed off. Look at our losers today. Verizon again getting shellacked. This is supposed to be a safe stock. Amgen down $8. Travelers down $5.40. Merck down 1.68. McDonald's down $5. Hey, I'm not supposed to lose money on these highfalutin, top-notch Dow 30 stocks. I thought everything was going to be made great again by guess who, and it's not happening for me. He won't reassure me by telling me that there won't be a recession. I mean, this guy is not making me feel very good right now. And so there's a lot of trillions of dollars shifting right now to either lock in some gains or minimize losses and reposition. And the liquidity might not be there right now to handle all of it. And so we get these swings in price where too many shares show up for sale and not enough buying for shares comes in to buy to neutralize the effect, and you get these swings downward. Then you get this undersupply, not enough stock coming in all of a sudden, and more stock needed to reposition different accounts, and you got these swings the other direction. The retail investors are in the middle of all this going, what the hell's going on? The waves are coming from every direction here. I've got my life jacket on, and I'm bobbing like a ping pong ball. What's going on? The day traders don't know what to do. We're down 67 on the Dow. We're up 240 on the NASDAQ. What is going on? Option writers, however, that's you, are doing this, going, holy crap, look at this. This guy, Uncle Bruce, nailed it. He told me to get the hell out of the market and go cash months ago when everything looked great. He was talking about stuff like... do I have that guy? Yeah, he was talking like this guy. He was talking about, I get paid to worry when there's nothing to worry about. And I thought he was the bad guy. I thought he was Ed Grimley in the movie The Firm. He was the bad guy. And Uncle Bruce is telling us, I get paid to worry when there's nothing to worry about. And I told my viewers, get out. Get out, get out, get out. Write cash secured puts on your favorites. Offer to buy back your favorite stock at a nice discount. Did you think there would be a 20, 30% discount on S&P 500 stocks in 2 weeks? Did you think that would happen? You didn't believe me, did you? I told you they go down faster than they go up. But those of you who did believe me went, he's right. I've looked at charts. He was showing off charts. He was showing off charts from COVID. He was showing off charts from the financial meltdown. He was showing off charts of all kinds of other events in history. I believe this guy. He's trying to tell me in plain English, stocks go down a lot faster than they go up. Go cash, let the markets liquidate out, go through all their heebie-jeebies. And maybe in 3 months I'll go back in, maybe in 6 months, maybe in a year, maybe in 2 years. It all depends how long this uncertainty will last. And here we are. The Dow now is down 4 points. You want to tell me where it's going to be in 15 minutes? Can you guarantee me exactly where it's going to be in 15 minutes? Yeah, this is what's happening out there. I'm telling you, kids, I'm warning you. No one else is going to tell you this. You're not going to find this on CNBC, okay? You're not going to get this on Bloomberg. They don't tell you this. What they don't tell you is if the stock market takes another dump, and it will, it's only a matter of time, It'll take another dump due to uncertainty, and Tesla goes under 200 a share, and Nvidia goes under 100 a share. I'm not saying it will, but if it did, and if all the Magnificent Seven stocks are under pressure, and all the other 493 S&P stocks are under real pressure, hitting new 52-week lows and below, now back to 2023 lows, 2022 lows. You start seeing that stuff, you're going to start seeing layoff notices, because the only thing companies have left to do is cut expenses to try to convince the market to buy my stock, buy the company that I work for stock. It will be the mentality of boards of directors. Their priority isn't going to be, let's invent a better product than we sell now so that we can make more money and better margins. That's not the philosophy of corporate America. Corporate America's philosophy is, what can we do to get our stock price up? Let's hire people to help us get the stock price up. Let's hire a really good investor relations department and just pump out all kinds of great bullshit announcements to get people excited. Rather than, why don't we grow the company? Why don't we become a better operator of our product? Why don't we think like an owner and dominate the business we're in and become a better player in the business we're in? No, they think about instant results. They have 8-second attention span problems at the corporate level. There are CEOs of corporate America that have 8-second attention spans. They were born in the 80s. They're in their 40s and they're wonder kids. You trust these guys? Are you out of your mind? These people are going to offload 15, 20% of their employees like that. And they're going to throw the baby out with the bathwater, as we used to say way back in the 20s. It's going to be ugly. And that means some of you are going to lose jobs, or someone you know, someone you cannot believe that you know got let go. You're just going to, I can't believe that person had 20 years experience in there. That person was the leader of a group of people. That person just got bonuses last year and they got let go. Yeah, because the stock went down. Not because the company's doing badly, not because of this or that. The stock price went down because, of course, tariff threats and all this other stuff. Unbelievable. Welcome to the program, pal. Nice to have you here. I'm just saying, you want to be giving yourself an insurance policy that protects you against the volatility of the world. And one of them is learn how to manage your money, learn how to manage your assets, learn how to write stock options. It's the only asset, the only weapon you've got. I don't know what else I can give it. You don't have to own a single stock to write stock options. Remember that. All right. But if you are stuck getting a 3-4% yield on your money as your only way to make money with your money, you're in trouble, because inflation is eating you alive. No matter what they say it is, you know inflation isn't what they say it is, because you go to your local store and go, that's 20% more. That's 10% more than last week. What the hell is this 3% inflation rate? They're lying to me. There you go. Welcome to the party, pal. Nice to have you here. Thank you all. We're down 47 on the Dow. We're up 44 on S&P. We're up 270 on NASDAQ. We're attempting a rally. We're attempting a boost. Tesla got up to what, 200 and what was it, 250 something? 251. Got to 251. It's now 246. It's still up, but it's not higher. Have we had it? Has this been the best that it's going to be? Are we going to now slump back over the next 2 or 3 days in slow motion back to $220 a share? It's entirely possible. Why should it go to 300 right now? What is Tesla going to be able to say to the world and do in their factories that's going to make the stock go right to 300 in the next week? What? The president's going to drive around the South Lawn in another vehicle? What more can they do? They've pulled their trump card out. Literally, they pulled their trump card out yesterday. How far is that going to go? Stock's 245.97. Maybe it's time to write options on Tesla right now. Some of you watching, I know you do this. Maybe right now, a 250, a 260, a 265, a 70 is the perfect contract to write for a month or 2 or 3 or 4 or 5 out for as much money as you can get your hands on to give you the insurance policy of a down dip. Thank you very much. May I have another? Call credit spreads. Absolutely available. There you go. I'm just a guy in front of a computer The Netflix shares got up to 926. They're back to 916. It might be that our friend who was thinking of doing a rollover might not have to do a rollover at all. He might be sitting there going, well, the stock just dropped from 926 to 916. It just dropped $10 a share. What am I worried about with my call credit spreads? Maybe I'll just sit there and go, oh, you keep dropping and I won't have to make a rollover. Yeah, exactly. If you did do the rollover, you pulled off the rollover that I suggested and you moved up $10 in premium on your two contracts for a month out, you are really happy right now because you got to be sitting there going, oh, Uncle Bruce, I pulled this off when you suggested it. I asked you about it. I pulled it off and the stock's down $10. Oh my God. Welcome to the party, pal. Call credit spreads. Here we go. Anyone having fun around here? Stephen Butler, I'm 133. I'm having a good time. I love it. Thank you for the thumbs ups, everybody. Hit the thumbs up button for me, please. Please hit the thumbs up button for us. We hit 219 yesterday. That was amazing. 136 now have come in. The question of the day, here it is. 236 votes are in. The question is, where I live, the average price for a house is about how much money? And I'm asking you to convert it to American money, no matter where you are. 300 to 400,000 US dollars. The average house in your neighborhood is 300 to 400,000 US dollars. 30% of all of you who say that's where it is. 400 to 600,000 US, 28%, just about exactly the same. 600,000 to $1 million American is the average price of a house where I live. 29% of you are telling me that. The first three answers, 30%, 28%, and 29%. How close is this? And then $1 to $2 million US, 13% of you are telling me you live in an area where the average is 1 to 2 million. It would make sense in New York, would make sense in Connecticut, would make sense in LA, Frisco, certain cities, no doubt about it. The average price of a house, average. We're not talking mansions. We're not talking picket fence and 2 acres of land and stables in the back for the horses. We're talking average houses. Unbelievable. Thank you for answering that question. It's very, very revealing to me what your world looks like. Ooh, talk about revealing. Here's something revealing. Oh my God. Jen, why are you naked like this? I can't believe it.
Are you kidding? I'm here in long pants and a sweater.
We're in the 50s here. You know that?
It's chilly.
It's cold.
Everything is relative.
Jared, good morning from everybody from Cincinnati, number 134.
Hey, Cincinnati.
Hey, WKRP in Cincinnati. You must be sick and tired of getting that whenever you say, they say, where are you from? Oh, I'm from Cincinnati. Oh, WKRP. You got to be sick and tired of that. Booger. Welcome anyway. Zed Estate, 1.6 million for a shack, Bruce. Vancouver, 1.6 million is a shack. It's not even an average house.
One of the priciest.
Dude, good morning, Auntie Jen. Isn't it incredible?
Morning, dude.
It's just amazing to me. I was telling the kids today that I was comparing 1980 to today.
Yes.
In many ways. We were talking about this last night. And I did some research today about how much would it cost to borrow $100,000 on a mortgage. And then, if you need $200,000, you just double it. If you need $400,000, you quadruple it. 6.5% mortgage right now. For every $100,000 you're using, you have to pay $643 a month.
Right.
So if you're doing a $1 million house, it's $6,400 a month. Just 10 times, right?
Does anybody have that little blue book anymore? Remember we used to
the
have
mortgage
the amortization book?
The amortization book on mortgages and loans.
It went up to
16%, 18% back in the day. Yeah, unbelievable. Jen and I had a mortgage in Creston, 2.49%. I remember those. I remember that one, 2.49% mortgage. And now I don't think you can get a mortgage in Creston for under 6.5. It's probably up to that. That is substantial, absolutely substantial. Unbelievable, everybody. Welcome to the program. Thank you, everybody. Zed Estate, I am number 140 on your thumbs up meter, Bruce. Thank you, Lorraine. I'm number 139 from Chelsea, New York. Thank you, Lorraine. Jen says hi to you. Thank you all for being here with us this morning. Welcome to the party, pals. It's nice to have you with us. We're open, we're trading, we're wondering where this market is headed. We've got a mixed bag right now. We're down 102 on the Dow. We were up 200 and something. We're up 300 in the pre-market on the Dow. We were up over 300. We're now down 100. We're up 30 on S&P. We're up 224 on NASDAQ. And NASDAQ's up 1.3%, S&P up 0.55, the Dow down a quarter of a point. That's the story. I'm sticking to it. Welcome all.
So what's the bagel story?
What is the bagel story, Zed?
There's a company story. There's a shares story. What's the bagel
There's an
story?
option writing story and there's a bagel story. Zed Estate, will Canada drop their rates today? Jared, not at all in my Johnny Fever voice. Not at all upset by it. It's all good if you tell me WKRP Cincinnati.
The airplane is pulling a banner.
Oh, he's pulling a banner.
It says
It says
W.
K.
The people in the studio are.
Oh, there's something coming out of the helicopter. I'm not sure what that is. Is it a bird or something? It's coming down awful fast.
Is that turkey?
It's not a balloon. Oh my God! It's turkeys! Live turkeys are being thrown on the helicopter,
Hitting the ground like bags of wet cement.
hitting the bag like what's the? Oh my God! The humanity.
And then he's off the air. Les?
We've seen the lost our reporter, our intrepid reporter Les Nessman. Oh no!
Which
God.
I think they wrote as a direct result of the whale on the Oregon beach and the Dave Barry story about
No,
it.
the Hindenburg.
Yes,
The
they
Hindenburg.
tied them both in.
Oh, it was
Yes,
so fun.
the hitting the ground like bags of wet cement, I think, came directly from the Oregon whale.
Oh, to be a writer. Oh, to be in that writing room. Brian, I sold a March 28th expiry NVIDIA covered call, 120 strike for 450. Whee! I have a similar sell for Rocket Lab. That is awesome.
That's
A
when he's
when
at the top of the roller coaster, arms are up, and he's going, whee!
We're at 114.95 on NVIDIA. He's writing 120s and getting 450, and it dies in 16 days. Oh my goodness. Crazy. Zed, Canada will reduce rates by a quarter of a point. That's what they're thinking. Jeff,
Yeah.
interest rates are still low. I bought my first house in 99, had an 8% mortgage rate.
Yeah.
Bought my current house in 07 with an 8.5% mortgage. Emmanuel, much love, Uncle Bruce. Thank you so much, Jarrett. Les Lessman, yes. Yes. What was
More
the
news and
was
less
it
Lessman.
more news and less lesson? The Buckeye News Award winner, the
I think multiple times.
multiple Buckeye News Award winner, Les Nessman. Yes.
My favorite. More news and less.
More news and less. Oh, love that show. Jen and I used to just love that show.
It goes on syndication. I'm sure you can find it playing somewhere in the
Oh,
world
and
right
clips
now,
on
all the time.
YouTube like no tomorrow.
Oh, yeah.
All the clips you can imagine
When
on
they
YouTube.
have
My
the
God.
what happens when you get drunk to your reactions.
That's right.
With Venus.
They had the cop come into in the control room into the studio with the two DJs, Venus Flytrap and Johnny Fever, and they had him drinking shots of vodka or whatever the heck it was.
Was it every like 20 minutes or something, or every hour?
Every 10 minutes or something, I had another shot. And every time Venus took a shot of booze, his reaction time got slower. And every time Johnny Fever took a shot, his reaction time got faster. And the cop couldn't figure it out. It was hilarious.
Have another drink.
Is this supposed to happen?
Okay. It ends up with Venus walking around with the cop's hat on.
Oh, Venus is completely zombied out. Oh, it's so hilarious. God, that was just a great show. What should I do for a bagel today? Yes. You know what I'm going to have? I'll tell you. Yesterday I bought some deli slices, and I got roast beef and ham.
Oh, you want roast beef and ham?
No, I'm thinking roast beef and cheese with a healthy,
Yeah, you're going to clean up that nose.
Yeah, I'm all clogged up.
Okay.
I need that the Leaps mustard, hot mustard. That might be the way to go today.
Cheddar
Oh, we got both. Provolone, maybe. That's possible. Yeah, a little do what you can do on that. That'd be awesome. Oh, thank you. Awesome stuff, everybody. Thank you, everybody, for being here. We've gone member-only commentary at the moment because when we trade the market storm, we like to be member-only. Thank you all for joining us today. Jeff Glass, I was able to refinance my home in 2021 at 2.9%. Jeff, only 6 more years and I got that sucker paid off. Jared, Venus Flytrap was the coolest. Richard Carlin, good morning, Auntie Jen. I loved the salesman, Herb Tarlick, with those wild suits and those white colored shoes. Oh God, and the gigantic collar and the big tie, with Les Nessman and of course Bailey Quarters and of course Lonnie Anderson was in there, and then the manager of the station and the son of the owner, the Maytag repairman, who was the
As
boss.
God is my witness, I thought turkeys could fly.
Oh my God. Unbelievable. And then they had the war, the war with the other radio station, PIG. So they had station mascots. WKRP had a carp, and WPIG had a pig, and they'd have fist fights. Oh, so great. Talking mascots, no less. Yes. Oh my goodness. We needed to laugh in those days, and we did get laughs in those days. Oh man. James of the Mystery Tree. I'm at the Exploding Whale Memorial Park right now. There's a great YouTube video about how a whale washed up in Oregon, I think it was, back in the 70s, and they were trying to figure out how to deal with this thing. And the news article, and they decided that what they would do is they would blow it up. They would use dynamite to blow up the carcass and blow it up into a whole bunch of small pieces, and then birds and nature would just make it all go away. Well, they put in a little too much dynamite, and as far away as they moved, they thought they were a safe distance away. It wasn't quite enough, and when the dynamite went off, oh my word, this massive amount of blubber went into the air. And Volkswagens and Chevrolet Impalas were being hit with slabs of blubber, hundreds of pounds each, causing massive damage to vehicles. It was a disaster, but it got the job done. It tore that whale into pieces. Oh gosh. Jeff Glass, this is a stream that plays all of Dr. Johnny Fever's music from the show. There's a stream that does that.
Oh, really?
Awesome. So awesome. Oh, man, what a show. I don't know if it lasted 5 or 6 years, and then it was over. It had its moment, and then it lived in lore thereafter because it made 5 years for syndication,
Right.
and they'd released box sets over the years.
Great theme song.
Oh, a great theme song, absolutely. Fantastic show. Just oh yeah. If you were in your 20s, in the 70s, your 20s and 30s, oh, you loved this show. You just loved this show because it was of the time. Too much fun. Anyway, welcome all to the program today. Hanging out with Jen and I. We so appreciate you being with us. We hope you're doing okay. Thank you all for. Oh, she's got it going now. She can't stop it. It's impossible. Oh yes, there you go. Thank you all for your kind words today. Thank you for joining us today. Hope you're making money in this market, taking advantage of a little recovery here or what have you, making some adjustments to your contract, your option contracts. There's money in them there, Hills, no question about it. And giddy up all of you out there for taking the dough off the table from those gamblers out there who are desperately trying to get a win and are on the wrong side of this market. They're buying contracts, not writing them like you are. They are not casinos. And what's that?
It rained.
It did. It rained last night. We had some shower activity here. A little of this, a little of that.
Rain in the desert.
We're dust free right now. There you go.
We are actually. Visibility is great.
It's great visibility out there. Indeed.
Go out there and take a deep breath.
Jen and I are getting ready for lunch today. We're going to catch up with JR, and he's coming to town. Looking forward to seeing him and compare notes and see how things are going. And looking forward to this. Thank you all for popping through here and joining us today. Great to have you in the house. Let's take a look at the thumbs up meter and the question of the day. We got 145 thumbs ups. Keep them coming in if you can. 55 away from magic 200. That target we like to get to every day. Help us out. Get us to 200 if you don't mind. The question of the day has attracted 252 responses. This is great. Very revealing. Where I live, the average price for a house is about 29% of you say 300 to 400,000 US. 29% of you say 400 to 600,000 US. 29% of you say 600,000 to $1 million US. It's incredible. 13% say $1 to $2 million is the average price of a house where I live. Is that incredible or what? Amazing. Just mind-blowing. The only problem with these numbers is that your paycheck at work, those of you coming into the workforce for the very first time out of school, high school, college, whatever, with advanced degrees, you're not making $350,000 a year. You're not making the kind of money that was being paid to people in 1980 for their services here in 2025. People from 1980 were making more money then proportionately than they are now. A typical house in 1980 was $80,000. It wasn't uncommon to make $40,000 a year, half the value of a house. How many people do you know that live in your neighborhood that have a $400,000 house that make $200,000? They have a $600,000 house, they're making $300,000. They got a $1 million house, they're making $500,000 a year. You don't know people like that. They're very few. I mean, few, not the average. The difference from 1980 to today is stark and profound. And yeah, it is cheaper for certain goods and services to purchase, like a microwave, yes, like a computer, a TV, much cheaper, That doesn't make up for the fact that if your house is a typical house in your neighborhood is $700,000 and you're making $70,000 a year, you don't qualify for a mortgage on that house. That's the reality. And now you're in the lower end. You're down in the lower middle class, even making that kind of money. You don't qualify for a mortgage. It's unbelievable.
Well, back in the day, they said a quarter of your money should pay for your housing.
Only a quarter of your money should pay for
30%.
housing. Now it's people are paying 80%. It's ridiculous. They can't get loans, so they get loans through secondary sources, and that's where the default rates are much higher. It's insane. Jeff Glass, I forgot to hit the thumbs up button. I'm now in there. 145. Walter Young, my first house was purchased in 1975 for $39,990. That house is currently on the market for $495,000. There you go. Yeah, from 40 grand to 500,000, just rounded out, 12 times as much from 75. So if you made 30,000 in 1975 as a wage, you should be making $360,000 if this is current, if your house values and your wages are the same. That's not happening. I don't see average Americans and Canadians making that kind of money. It's just not happening. The top 10% of Americans make $240,000 and up. The top 10%. What about the other 90? How do they afford anything out there? You get that $495,000 house, you got $95,000 cash to put down on it. You're carrying a $400,000 mortgage. That will run you about $2,500 a month on just mortgage payments, plus taxes, maintenance, and insurance, and utilities. At least $1,000 more. I mean, at least $1,000 more per month. There's a lot of people who can't afford that kind of money. Between the mortgage of $2,400, that's $3,500 a month. $3,500 a month for a $495,000 house. You tell me, do you live in a neighborhood with a $495 house as an average? I'm in a golf course gated community here in Rancho Mirage right now on a little holiday break, and there are units here going for $700,000 a US, $700,000 for the second house. These are second homes. Are you kidding me? It's insane.
They gotta have gold faucets.
Insane. Walter, you know what? I made 22 grand back in that day when that house was 40 grand. There's the ratio, half
There
the
it is.
money,
Yeah.
half the
There it
dough.
is.
Roast beef on a toasted sesame
Now,
seed
most
bagel.
people would like to have a little lettuce on there too. Good enough.
Most people don't write stock options. Come on, get with the program, everybody. Zed Estate says, I just sold a poor man covered call on SMCI. 55 strike expires March 28, 2025. 3 contracts, dollar premium, $300 conservative.
Nice.
Did you just buy those deep in the money calls rather than sold? Not sure what's going on here. Walter, good morning. Auntie Jen from Walter. Yeah.
Walter.
Good morning. Well, let's give this roast beef sandwich with provolone cheese a go on this toasted sesame seed bagel right there.
See if it passes. It's been a long time since you've had roast beef on a bagel.
That's true. I thought, what the hell? Let's go give it a try.
The roast beef sandwiches and turkey sandwiches, they're so good after having like a big Sunday night meal. On Monday, you could have.
Oh, yeah.
My mom always made bread on Mondays, so you'd have fresh buns, with leftover turkey.
Yeah. Could have used a little more of the hot sauce there, the mustard. Yeah.
No, it's there, honey.
I can barely taste it.
Really?
Yeah.
I will get it.
I'm just a guy with no taste buds.
I think because Philippe is burnt.
He's burned them out. Maybe give me a knife and I'll spread some on there. Welcome, everybody. How are you? Thank you for joining me here. Zed just did that. Good morning from Walter. Right on. Welcome all to the program. Thank you for joining me here. Oh yeah, here it is. Here's
There you go.
the Philippe's. The Philippe
Philippe, yes.
hot mustard. The original, home of the French dip sandwich, the LA original since 1908, I believe.
Yeah.
It's hot but good. Yes, indeed.
And it's not hot, horseradish hot.
Yeah,
That's different.
it's got a little emotion to it. Jen is watching me spread it on there, and she's already chortling, going, "Oh, he's gonna pay the price for this one. He's gonna get it, but good."
No, it's all good.
It's all good.
It's all good.
Let's see if that's enough there.
I don't think that's not wrong.
I'm just spreading it around here a little bit, doing the best I can with what little I have. Okay, well, we'll try a little conservative dip like that.
Yeah. You don't want to keep it just in case you're feeling good?
We'll see what happens. All right, well, okay, here's a little boost on the old mustard. Let's see what happens here. This could be scary. The Dow's down 138, S&P up 27, NASDAQ up 266, and I'm chomping into a bagel with roast beef, provolone, and Philippe's hot mustard sauce from downtown Los Angeles.
Do you know that mustard is the #1 condiment in the world?
Really, what in the world?
Everybody uses mustard.
I thought in America that salsa has taken over as a #1.
Salsa.
Salsa.
Huh.
I heard that on
I
Seinfeld.
thought you were from New Jersey and you were saying salsa.
Salsa. I heard it on Seinfeld in the 90s,
Must be true.
30 years ago. Can you believe that? Jerry and Elaine and George and the Cosmo left us in 1998. Can you believe that? 27 years ago, they stopped the show. My God. Of course, WKRP stopped in the 80s. Apparently, music royalties were a problem for them. Thank you, everybody. James and Mystery Tree, you got it. The reason it's the number one condiment is because they like to say salsa. There you go. Again, to quote Jerry Seinfeld and to quote George Costanza. Absolutely. Well, what's going to happen with this market? We're down 138 on the Dow, which is a third of a point. Nothing serious. S&P is up 0.5%. The Nasdaq is up 1.5%. Now, if the New York Stock Exchange were to equal the performance of the Nasdaq exchange, which is holding its gains so far, I would guess that the Dow would now be up over 1,000 points, but is not participating. Now, if the Dow were up 1,000 points right now, along with the Nasdaq, this move would continue, because now a bunch of retail investors will go, well, we're up 1,000 on the Dow. This is a recovery, but we're down 138. We're not kicking in on this. So I wonder if we're going to peter out here as the day wears on, and then try a rally tomorrow or the day after again. Is there another rally possibly coming to this market? I really wonder. I don't know. I do know that I'm eating this roast beef bagel with provolone, and it's very good. Oh, yeah. Oh, yeah. Giddy up. Well, mostly green. SoFi up 39. Rocket Lab up 20. GameStop up 19. AI up 35. Super Microcomputer up $1.92. ASTS though down 71. Nvidia up 588. Tesla up 1650, holding those gains. Palantir up 361 a share. MSTR down 591. Costco up 868. Coinbase down 298. Google up 64 cents. Apple down 130, not participating. Broadcom up 660. Microsoft down 70 cents. Intel still up 75. Netflix 1891 gain at $914. Down from that 920 something range to here. So the question is, will NASDAQ join the Dow, go lower, or will the Dow join the NASDAQ and go higher? S&P's in the middle of it, kind of going, we got 500 stocks here, and we're up 0.5 point. What do you think? Bobby, New York Salsa is the best. New York City, asked James, what? Get a rope. Get a rope. New York City? Really?
Get the rope. And the spade. We're going home in a bag. Another lovely hockey reference. You're going home in a bag.
Oh, my. The losers on the Dow are Verizon and Amgen. Yesterday, Verizon was the culprit. Again today. Slower growth in the cell phone subscription business. That's bad news for Apple. That's why Apple's down. this underlying economy. Remember, 90% of Americans only spend half the money that America spends. And part of the discretionary budget of most Americans is a cell phone with all the add-ons. Now, if Americans are going from an expensive Apple phone to a cheaper Samsung phone, can they get into another brand for $19 a month instead of $119 a month? Like, what's the objective here? To survive economically, cut back. What can you cut back on? Television stations, Netflix subscriptions, telephone subscriptions, apps. Yeah, we'll see what happens. Still down 155 on the Dow today. SoFi at 1165 on a volume of 14.8 million in about an hour. It's not a heavy day. High of 1208 today so far on SoFi. ASTS got down to 2752. It's now 2805, still down 60 cents. Rocket Lab 1808 right now, got up to 1938 on Rocket Lab. I thought $20 was on the way. I really did. I thought we were going to see $20 a share on the Rocket Lab stock, but we didn't get it. But the day isn't over, so let's not throw in the towel. GameStop at 22.84 at the moment, got down to 22.72, still up 23 cents. AI is 21.25, the low of the day, 21.14, almost hit 22 today, but we're at 21.25 right now. SMCI holding a 183 gain at 42.66. In the last week, we got that stock down to 36 something dollars a share. 35.73 was the low. We're at 42.80. It's a $7 improvement from the low of last week. There you go. Oil up $1.06, just hanging in there. 67.32. Okay. I'm trying to finish my coffee today. There we go. 111 drop on the Dow. It's improving. The Dow is getting better. Nvidia up $6. Tesla up 16. Go, go, go. Another little bit of good news. The volatility index down 122. It's a 2570, not 29. It's shifting, but it hasn't collapsed. The lower that goes, the better. So it's better, but it's not great. And now we see the mixed bag market. Dow down 106, about a 40-point improvement the last 10 minutes or so since I've started eating this bagel. Read into that all you want. 1812 on Rocket Lab, 2280 on GameStop now. We seem to be improving just a bit here and a bit there. Mm, mm, mm. Giddy up, everybody. Welcome to the party, pals. Yeah, Apple now down $2. Tesla up 15.40. Microsoft up 24. Google up 115. Amazon up 190. Nvidia up 560, and Facebook up $16. So they're all green except Apple. Then Apple is down because of Verizon. Second day in a row. Palantir 348 to the good side. And Netflix holding an $18 gain today. Mm, mm, mm. Interestingly, SoFi is 1160 now. That's the low of the day. Up 34 cents. The low of the day, 1160. High of the day, 1208 for SoFi. The Dow just went red. We're down 200 on the Dow. Sell program just came in. We'll see if it has any legs. I remember in what we call the old days, when I was just starting out, I was a young stockbroker. I remember back then, computer trading hadn't yet come into the market. I recall sort of in the early 80s that computer trading started to come into the stock market, where trading desks in New York and some of the trading posts on the New York Stock Exchange were allowing on the floor electronics assisted trading systems managed by managers, specialists, keep an eye on orderly markets, because more and more orders started coming to the floor of the stock exchange from trading desks that were being run by a computer system to a degree. Certain stocks that were actively traded were now being traded through computer systems rather than telephone calls between floor traders and telephone runners and all this sort of stuff. And the game plan was to just improve efficiency. More people were coming into the stock market in the 80s, and the thinking was, well, in order to handle more volume, we can't put another 200 people on the floor of the stock exchange. We're already elbow to elbow as it is. We need computer systems to come in to handle a lot of these order flows. What they weren't counting on, what wasn't being considered as a reality at that time, but some futurists were predicting it, was how computer program trading would kick in, where software would be created to measure order flow, buy orders versus sell orders, the size of buy orders versus the size of sell orders, measuring all of these algorithmic numbers. Because what was happening was, in the old days, again, when I started as a broker, if you went down to the floor of the New York Stock Exchange, the American Stock Exchange, or to the Alberta Stock Exchange, and where I was, the Vancouver Exchange in Vancouver, the Toronto Stock Exchange, you could take a look at a quote of a stock on what we call the board. You could see this big black board or this white board or these trading posts. And you could take a look at a stock to see, oh, IBM, there's IBM up there. And it would show you the highest buy price that's available, that's being shown, and the lowest sell price, the bid and the ask. And if the stock was $25 at that time, for example, you might see 5 buyers are trying to buy it at 25, and 4 sellers are trying to sell it at 21 1/8, because we used to trade in 1/8 of a dollar back then. But on the floor of the exchange, you would also see sellers behind 25 1/8, behind at 25 1/4, 25 3/8, 25 1/2, all the way down all the way up to like a dollar higher, 26. And on the buy side, you'd see $25 buyers and 24 7/8 buyers, 24 3/4 buyers, and all the way down to 24. So you'd see actually a market between 24 and 26, the buys and the sellers. How many are there and how many shares are they offering? Computer trading takes that basic information and starts coming up with the resistance levels, the support levels, the percentage likelihood of a gain or a drop on a momentum trade. And you multiply that by all 30 Dow stocks, or you multiply that by all S&P 500 stocks, and you quickly figure out, oh my God, in 1 second of time, a computer can calculate the entire S&P 500 momentum at any point in time. You just hit the button and it'll tell you what the number, it'll give you a number. And the number, if it's 100, it's flat. If it's 101, it's positive. If it's 99, it's negative. Or inversely, depending on your software might show you 105 is bad, 95 is good. And then there were professional traders at trading desks on behalf of hedge funds and mutual funds and pension funds and investment dealers who would look at stocks and look at sectors and look at the market as a whole. And they would see that these plus and minus figures would start popping up all over the place for either one stock or a group of telecom stocks, a group of banking stocks, a group of real estate stocks, whatever. And there would be this alert issued by these primitive computer systems to the desk traders and market managers, portfolio managers, to say, the stocks that you're interested in, these 20 stocks that you're following that are not connected to each other in any other way other than you just told me to watch 20 stocks for you, this is the rating I'm giving you on these stocks. Now, the overall market, the rating is this, but on your 20 stocks, the rating is that. And on banking stocks, it's this. And on real estate stocks, it's that. And on telecommunication stocks, it's that. And the desk traders used to react to that stuff. They would do buys and sells. They would go short, or they would go long, or they would unload positions, all with stocks back in the day. This is the 70s and early 80s, until computer systems then came in that were designed with limitations to be able to buy and sell stock on their own. This is where computers started to enter trades, which we used to call the algorithmic trading patterns, would show up. And after a few weeks of this and months of this, the floor traders got used to the algorithmic movement of the markets. We used to realize, oh yeah, the Dow just moved 50 points with no explanation. Algorithms have kicked in. A stock is oversold. A stock is overbought. There's this, there's that. And around we go with swing trading. The market, however, the stock market, tried to stay on top of this as best they could. The regulators, the floor governors, which are the stock brokerage's own people, because the stock market was owned by the brokerage business. All the brokers were members of their exchanges, and they hired and fired management to run these exchanges, and they had dispute settlements and all that stuff, insurance, all covered by industry. It doesn't exist anymore. It's now a whole different world. But they were trying to regulate and control the algorithmic trading patterns to not have abuses come in. And everything blew up in 1987, because at that time, in 1987, the Reagan policies of economic legislation, tax cuts, spending out of control, deficit spending, the Federal Reserve trying to raise rates or limit the money supply. We had us a problem in October 1987. A real financial crisis was emerging globally, and America had a lot to do with it, because America had a problem. It kept spending more money than it was bringing in from the tax man. Does it sound familiar? But it got to the point where the rest of the market, the rest of the world got spooked by it, and that's not good. When the rest of the world gets spooked by something America does, there are violent reactions. And we had in one day a 22% dump in the stock market on the Dow Jones. And algorithmic trading did not solve the problem. Couldn't save brokerage firms and clients from losing money. And this is where a lot of market pros went, well, wait a minute, we got the computer that can do 1 million calculations every second, millions of them, way faster than any human can, and we're getting the crap kicked out of us. What's this all about? There's no support algorithms. They were all just trying to sell at the same time. There was no swing trading. It was all just complete mayhem, and it was all analog communication systems, overwhelmed the systems, and quotes were now 10 minutes behind, 20 minutes behind. Whatever your computer said IBM was trading at, that was 30 minutes ago. What it's doing now, I have no idea. The only guys that were getting trades done were floor traders. They're the only ones who could get trades done. But floor traders can only do one order at a time. And they can do fast trading. They can do a lot of trading in a minute, but there's a limit to human ability. And when the entire market or a huge part of the market becomes automated, and you have computers trying to tell people what to do to get effective trades done, it doesn't work. And so you either go back to the human cry-out system or you go to the computerized system. You have to choose. And the answer was, you've got to go computerized, but you've got to put limits in place for market volatility to protect the very market that you're promoting. Because it's a cash system. Today, right now, stocks are trading on a cash basis, settled in 1 or 2 days. Used to have a 5-day settlement system way back in the day. Now it's 1 or 2 day settlement system. So if you know that you've put in an order to buy SoFi at 11.48 and you got 2,000 shares confirmed, you own them, you bought them, you got them, you know you have them. You don't have to worry about the settlement of it. It's all computerized. It's all being handled. If you're the seller, you got out of 2,000 shares at 11.48, you know you're settled on that side. You can now move on to your next trade. Both parties could move about their business. Day traders can get out and in or in and out all day long with trading left, right, and center, and it's all handled by the computers. And they've got a scorecard on their computer telling them, here's how many trades you've done, you're up or down today. That's all they want to know. 1987, it all came crashing down. And after that day, within a month of that day, and 3 months of that day, the New York Stock Exchange, the American Stock Exchange, the NASDAQ markets, the Philadelphia markets, the Chicago markets, the Toronto markets, the Montreals, they all put in circuit breakers. And those have been modified since then to now make it impossible for a market to drop 20% in 1 minute. If the stock exchange wants to drop 20% in 1 day, it's going to do it in an orderly fashion, believe it or not, giving a lot of time for buyers to put bids in to try to catch waves, buying waves, and time for sellers to put in orders with a certain market range that they know they're playing with. It's greatly improved the business. But we've shifted from the cry-out system when I started to the computerized system in the first 10 years of my career. And it was brutal and it was wild. And now, of course, stocks trade in pennies and they trade in fractions of pennies on top of everything else. And the next wave now is the active discussion of doing 22 to 24 hour a day trading on the New York Stock Exchange, in Chicago, I guess, and elsewhere around the world. And so that equities will trade all the time, 5 days a week, 24 to 48 hours, 22 to 24 hours a day, depending on the systems. That's what they're trying to do now. It's going to require a lot of logistics. It's going to require a lot more AI software. It's going to require a lot of safety valves. It's going to require a lot of regulation, what some people don't want to hear, but it's going to require, because there can be abuses. The problem with the markets is that if a player comes in that can dominate a market when there's a quiet lull in action, you can have wild swings in stock prices with one character coming up with all kinds of shenanigan trading. Can't have that happen to the confidence of the market. And so around we go. How will this all work out? Do we go to a 12-hour day first? A 14-hour trading day? Is that where we're headed first? Try that for a year or two, adjust it, and then go further out? Or do we go right to 22 hours a day, right now, just overnight, boom, boom, 22 hours a day trading, and we're off? We'll find out when we get there. And this is in my lifetime as a stockbroker guy, as a market guy, from 1979 when I was 24 until now at age 70 practically. The changes I have seen, unbelievable. Now, I go back 45 years. From 1979, go back 45 years. We're talking about 1934. Not even, that doesn't cover 1929. The changes from 34 to 79, and the changes from 1950 to 1900, unfathomable changes took place all during that time, and stocks traded. And here we are at 2025 with the world we're in. It's unbelievable what's happened. I hope you don't mind me just musing about the old days. Thank you all for being here. Appreciate you. Juan, stink bids at this level are a godsend. Giddy up. Juan, I got my win cover call back for 22 cents. I sold it for $1. Actually, I sold it for $1.40, bought it for 22 cents. Well done, Juan. Well done there. Ed, when getting a credit or paying a debit with the bid, mid, and ask on IBK, you suggest getting a cent better than the bid or ask and price, spend time adjusting person? Stink bids. You wanna be the lowest seller or the highest buyer. Can you do it with a penny differential? That's how you do it. So if you have a contract that you're trying to buy, and the market is 115 bid, 150 offered, that's a 35-cent spread. To buy one contract at 115 or to buy one at 150, that's a $350 or $35 differential per contract to you. That's unacceptable. You can't just go in there and buy it at 150. That might be way too high. On the other side, you're a seller. You're trying to get the best price you can to sell something, and it's 115 to 150. You don't want to take the 115 bid and not sell it at 150. You want to sell at 150. That's $35 per contract on the way out. Now, there are viewers here who have realized and learned through my lessons the art of stink bid and stink offering, where they are saving themselves and protecting their investments by 10 and 20 and 30 cents a contract on multiple contracts all the time. And you think about this, if you're into weekly option writing and you're doing credit spreads, call credit spreads, put credit spreads, iron condors, an iron condor is 4 contracts in one order. You cannot be 30 cents higher or lower on 4 contracts in an iron condor. You will be wiped out. You will lose your money. You've got to be the wisest and sharpest player in an iron condor or a credit spread. And you think about getting into a $5 credit spread on NVIDIA. You've got $5,000 to use to make money with. You can do 10 call credit spreads with $5,000. That's 10 calls you're buying and 10 calls you're writing. You can't lose 30 cents per position. That's $600 you just kissed off. No, you've got to protect yourself. And that's just to get into the iron condor. What about, or the credit spread? What about getting out of it? That's another $300 or $600? No. You have to learn the art of buying and selling on stink bids and stink offers. That's what my lessons are all about. You also have to be able to change your order. We call that CFO. You have to learn how to CFO your orders. You have to learn how to CFO credit spreads. That's what my lessons are for. Get out there, kids. Spend your $200, learn how this is done, and save millions of dollars in losses for $200. Because when you start doing 10 credit spreads, 20 credit spreads, 50 credit spreads, and you're doing 2 or 3 a month of that caliber, you're doing hundreds of contracts, thousands of contracts a quarter, tens of thousands of contracts a year. And I can save you or make you 20 cents a contract more because you learned the art of stink bids and stink asks and all the other nuances around it. You do the math for the next 10 years of your life. You'll flip your lid when you do that math. I am amazed at how many billions of dollars are lost by idiots who don't understand the nuances of the options market and the psychology of the market. But that's your gain. That's their loss. This is your chance to shine. The Dow has decided to go further into the red. It's now down 313 points. It got to within 20 points of going up, and it gave it all back. The S&P is still up 0.5 percentage point, it would appear, and NASDAQ seems to be up 0.85 of a percentage point. But the Dow is off 0.83. So we have a 1.7% differential between the Dow's performance and NASDAQ. NASDAQ is up 0.85, Dow is down 0.85. That's what's going on. For whatever reason, it's doing it. SoFi 1152, still up 26 cents. Rocket Lab up 6, GameStop is now down 9, AI up 17, and SMCI is up 222. The question on everyone's mind right now is, as the day wears on, do we continue to see a slump in the markets as a whole as this rally phases out? Or do we have a slump where we hit a point where the market buying overwhelms the weaker selling because the selling is petering out, and we get a surge this afternoon that takes us much higher than where we are now, and people are kicking themselves for missing the trade? Welcome to the markets. It's about greed and fear. If you're an option writer, you're just going with the flow. It's all there is to it. It's nothing personal. You're just going with it. NVIDIA is still up $6. Tesla is up 15. They are in their world. The markets are in their world. You got to figure out what your world is all about. Thank you for joining me and Jennifer for being here for another day so far. Tonight, 7 o'clock Eastern Time. If you're one of these people, you're joining us for Primetime Live. Gold Bagel members only. Become a Gold Bagel member immediately. Click that little button on your avatar. Where is that avatar? Is it up there in the top corner for your YouTube page? Join my channel. There's a join button down here somewhere, isn't there? Just below here. Find the join button, hit that, and you can now join my channel as a member through YouTube. YouTube will handle it. They'll take your dough. Don't worry. And you can tell them, oh, just charge my credit card every month for being a member of this man's channel. I don't want to have to worry about it every month. Just do it automatically. You're helping me. You're helping yourself. Join us tonight at 7 o'clock, Primetime Live with Uncle Bruce. For Gold Bagel members only, you'll be able to easily ask me questions there. We can go over some of your trades you've been doing lately, talk about the trades you might be wanting to go into starting tomorrow, the day after, strategies, you name it. All right? Look forward to seeing those of you who are going to be here tonight. As always, the regulars are all going to be here. Gold Bagel member only. It's a little family of option writers that gets together with me every week, and we talk about writing options to make money. Join the party, pal. It's time for you to make money in this world, not to be caught in the bottom 90% of this demographic world that is changing negatively against many of you out there who have not learned the art of writing options. Thank you all so very much. Have a wonderful rest of your day today. Make it very profitable, please. Thanks again for the thumbs ups. We are at 166, only 34 short of the 200 mark that we try to hit every day. If you're watching on the rerun, please hit the thumbs up button for us. Give us a little further momentum up to the 200 level. Thank you all so very, very much. And again, 281 of you have hit the poll question today. I appreciate that. 27% of you said your average house price in the area that you live in, 300,000 to 400,000 US. 30% say 400,000 to 600,000. 28% of you are saying 600,000 to $1 million, and now 14% of you, $1 million to $2 million is the average price of an average house where I live. Folks, if that is true, that if you are dealing with 500, 800,000, 1.2 million and more for an average house price, you have got to learn how to make money in the options market. You have got to add money to your bottom line, and you've got to beef up your retirement savings right here, right now. And for a number of you out there, you might be coming to the realization the longer you hang out with me here, you're beginning to figure out, Uncle Bruce, I did not realize this, but hanging out with you now for a few months, I have figured out the reality is of the fact that I have enough capital in my retirement accounts, I have enough equity in our house that we can tap equity in our house through a mortgage, a second mortgage, equity line of credit, homeowner line of credit, whatever you want to call it. We can bring enough dough into our trading account using credit spreads and cash secured puts. I can bring in 3 times my salary up front writing cash secured puts. I had no idea I could do that. I didn't know I could take 300 grand and bring in 120,000, or bring in 400, 500,000 and bring in 180 grand in the first few months of trading contracts, writing contracts. I had no idea I could bring in double my paycheck for a year up front writing cash secured puts. You have completely altered the universe here. You completely altered. We have paid off the RV loan, the car loan, all our credit cards. We had a second house that we were renting with a $20,000 mortgage on it. We paid it off in full. We're dumping that place. We're taking the cash from that, and we're going to pay off our second mortgage that we just took out here. And I'm just gonna live off writing. I'm gonna live off my money. I'm gonna make my money pay my bills. The rich get richer, and that's what you're becoming. Whatever your situation is, kids, you're all different. Congratulations, Nico. We'll see you tonight. Thank you, Deep Value. Thank you all for being here. Thank you. See everyone here. Charlie C2. We'll catch up with you later tonight. Keep the faith. Keep going. Keep writing. And we'll be with you tonight. Jen and I are going to say goodbye to you in 3, 2, 1. Goodbye.